Quality of auto loans to deteriorate further. The pension crisis is getting worse and is now just too big to ignore. And precious metals to protect wealth during the global energy collapse. Here are your collapse trends for March 27th, 2017. Auto loan quality to deteriorate further. Auto loan and lease credit performance will continue to deteriorate in 2017, led by the vulnerable subprime sector, according to Fitch Ratings. Subprime credit losses are accelerating faster than the prime segment, and this trend is likely to continue as a result of looser underwriting standards by lenders in recent years, said Michael Taiano, a director at the credit ratings agency. Banks are starting to lose market share to captive auto finance companies and credit unions as they begin to tighten underwriting standards in response to deteriorating asset quality, Fitch said. Macroeconomic conditions, including low level of unemployment and growth in household wealth, should help constrain upward pressure on credit losses. Auto loans are one of the newest and biggest subprime bubbles to have been inflated since the 2008 collapse. When this bubble pops, it could trigger massive defaults with highly leveraged finance companies. The pension crisis is getting worse and is just too big to ignore. As was the case with the subprime crisis, the writing appears to be on the wall, and yet calamity has yet to strike. How so? Call it the triumvirate of conspirators, the actuaries, the accountants, and the accomplices in office. Throw in the law of big numbers, very big numbers, and you get to a disaster in a seemingly permanent state of making. Unfunded pension obligations in 2007 were $292 billion. Today, they are $1.9 trillion. Credit rating firms have begun downgrading states and municipalities whose pension risk overwhelming their budgets. New Jersey and the cities of Chicago, Houston, and Dallas are some of the issuers in the crosshairs. Morgan Stanley says municipal bond issuance is down this year, in part because of borrowers are wary of running up new debts to effectively service pensions. So why not just flip a switch and require truth and honesty in public pension math? Too many cities and potentially states would buckle under the weight of more realistic assumed rates of return. By some estimates, unfunded liabilities would triple to upwards of $6 trillion if the prevailing yields on treasuries were used. Pockets of the country would face essential public service budgets being slashed to dangerous levels. We have reported on this insane pension situation before, but every day there seems to be a massive red flags flying into the air, but not many people seem to care. Collapse fact: the largest transaction ever made on the Bitcoin network was 194,993 Bitcoins. It represents more than $114 million according to the effective rate on July 31st, 2014. A shitload of money is the comment submitted by the recipient of the funds about the transaction. If you're wondering who transferred this large amount of Bitcoin, some people on Reddit determined the transaction was actually a transfer to a Bitstamp cold wallet. Precious metals to protect wealth during global energy collapse. There will be very few assets worth owning when the energy collapse begins in earnest. Precious metals will be one of the few assets that will protect wealth as the US and global oil industries degenerate. Very few people truly understand how bad the situation will become as low oil prices continue to gut the US and global oil industry. Oil is the lifeblood of our economy. In addition, a significant portion of the coal we use to generate electricity to power homes and businesses is transported by truck, constantly running up and down the interstates and highways. 99% of investors have their wealth in stocks, bonds, and real estate. These three assets will collapse along with the disintegration of the US and global oil industry. The reason physical gold and silver will protect wealth is because they are stores of economic energy, while stocks, bonds, and real estate are energy IOUs. The world will find out very soon a system based on highly leveraged debt is not sustainable and will get a crash course in what real money should be. Thank you so much for watching, and don't forget to sign up for our mailing list so we can send you collapse alerts as they happen.